Hi guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra Parekh. You guys are tuned into your stocks and we've got lots of queries coming in, so we're going to get to that in just a bit. But first up, a quick look at the markets. We've come up significantly from the day's high, as you can see on your screens. So, there has been a drop led especially by what's going on with the private banks. If you see the rest of the Asian markets, there's been no sort of drop there as well, holding up with very strong gains across Asia. So Nikkei is up 2%, Hong Kong markets up 1.9%. So all of those looking quite good. The slightly positive sign is that the mid caps and small caps are holding up much better. So that is, seeing a significant outperformance to the frontline index. Do keep that on your radar. And for the banks, like I was mentioning, it's quite split. So while some of the PSUs are doing very well, the private banks, the likes of Axis, Kotak, are really the ones which are dragging the market. In addition to the banks, you are seeing cuts come through in the PSU stocks. So, the likes of ONGC, NTPC seeing some cuts. You have Coal India, which is seeing some cuts, and some of the consumption names as well, the likes of Britannia, Nestle, HUL. That's what's going on with the market action. But remember that this is ahead of a big queue that we are tracking. The Fed decision will be out, around 11 o'clock tonight. And so, of course, we'll react to it tomorrow. But that is the big queue that we are working with right now. Let's invite our guests on the show on that note to really take you through all of your queries. And to help answer that, we have Parthiv Shah joining us. He's director at Tracom Stock Brokers, as well as Rajat Bose to answer all of the questions on the technical side as well. Parthiv, Rajat, thank you both, as always, so much for taking out the time and speaking to our viewers about all of their individual queries. Let's get straight to it then. The first one comes in from Ajay Chopra, who's written into us from Pune. He says he has 250 shares of L&T, which he bought at 300, and he has 200 shares of Axis Bank at 500. He's a long-term investor, and he wants to know whether he should hold or sell. Parthiv, I'm going to come to you first on this. First of all, he bought L&T at 300. I'm a little jealous of that. But, I'm guessing he's already been holding for a very long time. It's definitely been more than 10 years, that kind of level. But do you think even from these levels, it's a good one to keep holding?
Good afternoon, Pavitra. Yeah, absolutely. I think he's been a very patient investor, and getting into LP at 300 and still holding on goes to show that he's a very long-term investor, and he's invested in quality names. No doubt, L&T since the last many years has been kind of languishing, has not delivered very good shareholder returns because of the lower ROEs and some of the projects where it was stuck and it had high working capital cycle. But I think going ahead, we are upbeat prospects of L&T because things are changing. The management is razor focused to improve the execution of a lot of its projects. A lot of past legacy projects are out of the way, and now the new projects that they bid for, I think, come at very good levels for them. And I think the execution and the margins have been pretty decent. And L&T always commands a slight valuation premium because of the fact that it's also a holding company, holds a lot of other IT services and other group companies, which adds to the value. And I think it's a company where once the cash flows start doing well, they also tend to give out a lot of good dividends. So at his price, I think the dividend yield is also very attractive. So certainly hold on to L&T. Talking about Axis Bank, I think a lot of cleanup has already been taken place under Mr. Amitabh Chaudhary, and I think they are also razor focused to improve their presence. And more importantly, a lot of past legacy loan issues are behind, and now I think they are looking aggressively. They have kind of acquired even the Citibank portfolio in the country, and that will take some time to consolidate, but that's a key asset that they've added onto. And especially in the credit card segment also, they will have a very good business presence. And in terms of valuation as compared to its peers like ICICI or HDFC, Axis Bank is quoting at a slight discount. But probably once they show some good numbers and especially the NPA levels start reducing and the credit costs starting to come down, I think Axis Bank will again start to rally and do reasonably well. So hold on here also.
All right, got that. So hold on to both of these stocks, L&T and Axis. He's gotten at good levels into quality names, and he's definitely been rewarded for his patience. Rajat, I know this is someone who's looking at a very long-term investment. He has been in it for a while anyway. But say someone was looking at these as fresh positions, L&T, Axis. How are these looking on the charts? For Axis, for instance, I mean, it's been around an 8-9% drop this year itself.
Well, what I wowould say about Axis is that Axis actually has tested its 200-day moving average, 200-day exponential moving average 3-4 times in the recent past, say about last 6 weeks or so. And now it is being resisted by the 50-day exponential moving average, which is around, say, 865 or odd level. Once that is taken out, then Axis actually can do well. In fact, Axis, from a technical point of view, at this level for a target of 960 or so, maybe over the medium term is a good bet. And otherwise, the kind of trend that Axis has been showing and the kind of improvements that Parthiv has just discussed, from that perspective, it's a good medium to long term bet. So Axis is a buy. And the stop loss, in my view, should be somewhere around the last low. Say, put a stop loss below 800 and carry on with Axis. Regarding L&T, I would say that, see, L&T is a stock. We used to be bullish in the early 90s in the sense that if L&T and Tata Motors do well, you know that the economy had been doing well. Around that time, these two stocks used to be benchmarked for that. And currently, L&T is in a range-bound situation, and today's it is around the top level for the last 3 months kind of range, close to that. So I would wait for a decline and decline to about its 20-day moving average, which is around 2160. That would be a better entry point. But otherwise, somebody who is a long-term investor, I mean, definitely one should continue to hold on. And although I am more bullish about its new siblings or offsprings, whatever you call them, I mean, especially the software companies.
Yeah. All right, that is very useful on L&T and Axis Bank both. And for someone who's holding from when the stock is at 300, I mean, you can imagine the kind of gains that have been made here. But moving on now, the next query comes in from Venugopal Karanam, who writes to us from Andhra Pradesh. He holds 3,000 shares of Escorts Kubota at 2350. He now wants to know whether he should hold or sell. Rajat, like you can see, he is sitting on quite a loss here. This stock has been looking weak, right? In the past month alone, it's down around 10%. Do you think that if he holds for, I don't know what his holding, capacity is, but do you think in the medium term it could he could recover the loss?
See, after tasting a high of 2,358, and that was on 1st of October last year, it has been on an intermediate downtrend, and that intermediate downtrend is still continuing. And what is impending, I mean, that can happen over the next 7 days or so. That is, the 20-day moving average will pierce the 200-day exponential moving average from above, which is actually a bearish sign. And that the fact that after testing quite a bit of times, the 200-day moving average has been cleared on the downside means Escorts is in for more downswing. So if he is losing money and continue to hold on, maybe something will happen. But otherwise, suppose if someone's time horizon is medium term, it is still better to actually exit this stock and reinvest that money elsewhere.
Okay, got that. Parthiv, coming to you on Escorts Kubota as well, you know, every time we've spoken to the management, they sound quite positive. But right now, you also have this entire story playing out of unseasonal rains. We've talked of an El Nino. In that context, how do you look at Escorts and, you know, any other tractor manufacturers for that matter?
See, I do agree with Rajata's views. There are a lot of headwinds for a pure farm equipment segment player. And Escorts Kubota, we know for the fact that Kubota, the Japanese player, has bought in the stake at around 2000 levels. And they are here for a very, very long term. In fact, they've been even talking about the fact that not only they want to serve the Indian markets, but they want to use this particular vehicle as also an export-driven business model going ahead. So it will take some time. And it seems from the investor's mindset, because he's invested just 4 months ago and he's still inquiring, goes to show probably he is having a medium mindset. So in that case, I would not suggest even a 1 year view in Escorts Kubota. I think I do agree that it's better to switch into some other name, and I'm very comfortable suggesting M&M, because M&M also has the farm equipment segment. Not only that, its other verticals are doing extremely well, especially the SUV segment. The order book is very strong. They're adding capacities. The volume growth will look even better next year, and also the EV segment is doing reasonably well. They're trying to monetize that as well, so that will add a lot of value, and it's quoting at around 16 times trail multiple. Valuations are pretty cheap there. And again, M&M has this holding company structure where it holds some of its group companies, which also adds like value to the overall valuations.
All right, that is the view coming in on this one. I'm going to try to take one more query before the break. M.N. Krishnamurthy writes to us from Tamil Nadu. He holds 51 shares of Bajaj Finance at 1773. He wants to know the future prospects of his investments. Parthiv, clearly he got in at a great price on Bajaj Finance. I know it's been under pressure in the past, in the recent past. But of course, from the levels where he bought, the stock has seen a huge up move. Do you also believe that this is one of the stocks that you should just have in your portfolio and keep it there?
I would say, Pavitra, it's relatively easy to say because his entry price has been pretty low, and one is always tempted in such great quality franchisee to suggest a long-term view. No doubt, I think the current valuations seem to be a little debatable. The only reason being that there have been some headwinds in terms of the growth. We can also not forget the fact that now the base of its AUM has been a lot different than what it used to be in the past. So growing at the same run rate would be difficult, challenging. And I said this year, I think there are a lot of inflationary headwinds also, which is probably damping the consumer sentiment. But nonetheless, I think it's a fantastic franchisee and should not be looked at a one-year perspective. Our sense is that, this will be the year where the valuations will contract, and I think his entry point has been at a point in time where I think the valuations are very attractive. So I would suggest a hold, and if the investor has a 2 to 3 year mindset, I think even from here, very good returns can be made.
Okay, good returns can be made with a little bit of a longer time horizon. Rajat, your call on Bajaj Finance, does the recent underperformance bother you? Do you think that, you might want to stay away for a bit? Because, I mean, like we were saying, in the past 6 months or so, it's down 25%. Does that make you nervous?
No, it doesn't. For the simple reason, yes, one thing I would definitely admit is that in the recent past, over say last year, August or say early October, there had been two tops around 7,500 and 7,600, and from there Bajaj Finance has come down. Point here is that it is basically the other finance companies are closing the gap. Bajaj Finance had a major advantage, especially in terms of its database handling and other things. But those, if you look at the latest margins performance about other companies, the competitors are closing in. That's the reason perhaps some people might have booked profits or reducing their position. That's why it has come down. But from a technical point of view and from a long-term fundamental point of view, if you have to invest in non-banking finance companies, then this is one of the stocks that can be bought at current levels. And if one is a long-term investor, one should actually add to one's position and can, or if she or he doesn't, then carry on with the position, because this is the major support area. Bajaj Finance is not going to go down much. On the other hand, if the market recovers, at least you can see a 10% jump from the current levels to about testing the 200-day exponential moving average around 6,400. And the long-term prospects still look quite bright. Parthiv would agree that from fundamental as well as technical point of view.
All right, I hope that helps, the person who's written in to us with this query. Both of our guests agreeing that Bajaj Finance, even though it may have seen a little bit of a correction in the past few months, is a good stock to hold on to. It's one of those quality names that you can continue to hold. But with that, we do need to get into a short break on the show. You don't go anywhere. There's lots more queries coming up in just a bit, so stay tuned.
Yes, they're electric, among other wonderful things. Going anywhere, they will take you far. The fully electric Audi e-tron models.
%100% happiness with SBI Home Loans. Zero processing fee at 8.50% onwards. Apply today. Call 1800112018. Visit homeloans.sbi.
दीप शिक्षा का जले,
हर बच्चा स्कूल चले, हो सवेरा मिटे अंधेरा, एक नया अभियान है, स्कूल मेरा मेरा मान है, स्कूल मेरा मेरा मान है,
अच्छी शिक्षा हक है सबका, सबको अवसर एक समान, हर बस्ते में अपना सूरज और मुट्ठी में आसमान है। स्कूल मेरा मेरा मान है, स्कूल मेरा मेरा मान है।
बन के रहेंगे जो बनना है,
मन में ये विश्वास है।
चलो कि रास्ता कठिन नहीं, अब चलो कि मंजिल पास है। स्कूल मेरा
पंजाब के सरकारी स्कूल विश्व स्तरीय सुविधाओं से संपन्न हो रहे हैं। आप भी अपने बच्चे का दाखिला जरूर कराएं। बेहतर शिक्षा, बेहतर परिणाम, सरकारी स्कूल पंजाब का मान।
कैसे करते हैं ट्रेड? ट्राई 5 पैसा। Powerful charts and research tool. One click trade is the new cool. Get access to live market data. Margin funding भी है रे बेटा। 5 पैसा app करो install. Trading made simple, simple for all. With 5 पैसा's wide range of products. यहाँ वहाँ चाहे हो जहाँ. Simply trade on the go. ऐसे करते हैं trade. सोच मत छोटे, इंस्टॉल मार। Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Be celebrated with the big, bold, beautiful Nissan Magnite.
Hey guys, welcome back. You're still tuned into your stocks on CNBC-TV18 and we still have Parthiv Shah and Rajat Bose with us to answer all of your stock-related queries. The next one comes in from Gayatri, who joins us from Andhra Pradesh. She holds 65 shares of Piramal Enterprises, which she bought at 23.82. Considering the big losses that she's making, she wants to know whether she should remain invested and hope to recover this loss, or she should just get out at these levels. Rajat, coming to you first on Piramal Enterprises. I mean, of course, we've seen the kind of correction that's come through here, but what would you advise at these levels?
See, Piramal Enterprises, you look at fundamentals, you look at the technicals, so both will tell you that it is better to exit. Actually, mostly here, the fundamentals are being reflected in the price movement, and the technicals are simply telling you whatever is happening fundamentally, that the stock's fundamentals are weakening. The 200-day exponential moving average was tested way back last year, August, around say 1200, 1100 kind of levels. After that, it came down to 800, and from there has been a sideways movement. Again, it tried to take out this 200-day moving average last February, that means last month, early last month, and then it has started sliding. It could slide even further. So this, I mean, if you stay invested here, you don't know when you will recover your losses. But as we were discussing, maybe Bajaj Finance, and then there was Axis Bank, then many stocks, quite a few stocks we have discussed where the prospects are better. One would better switch from this counter and suffer no more losses. Immediately, even if there were to be a recovery, that should be used to sell this. This is very weak.
I mean, absolutely. We've seen 70% of a cut in 1 year alone. But, you know, this is the thing, right? Sometimes you don't know where to book out and for how long you should really keep the faith. Parthiv, coming to you on this one, you agree Piramal is one that it's best to get out of?
See, Bhavita, it's a very tricky thing because I think right before they invested into the financial services space, I think this company and this management had a fantastic track record. They had created wealth by almost 24% compounded since inception. They had created even a fantastic pharmaceutical business which they sold out. I recollect the name was Nicholas Piramal. And using that capital, they had reinvested, they bought stake in Vodafone, they exited that and generated fantastic internal rate of return for investors. But ever since their their foray into the financial services, and probably that has been the starting point of their downturn. I think the entire strategy went haywire when they were fully into wholesale lending, and that too into very risky wholesale lending. And now they're trying to change the course and trying to add more of the retail side of the loans. And the DHFL acquisition was also a shocker, because at a point in time when they were trying to stabilize things, and buying the DHFL portfolio led to the decline in the capital adequacy, which is still strong at 21%. But I think market is really confused in terms of what is the direction the company wants to take its NBFC business into. And even the pharmaceutical vertical, which got demerged, I think that has also destroyed a lot of shareholder wealth. So probably I think I do agree that currently in the financial services space, there are better names, and why not go with some of the well-known banks like Kotak Mahindra Bank or an Axis Bank for a long-term investment thesis.
All right, so that is the call coming in on Piramal Enterprises. By the way, important flashes at the bottom of your screen, and a sharp move that we've seen in the GAIL stock as well. The integrated natural gas pipeline tariff will be now hiked to 58.61 MMBTU. So this is with effect from the 1st of April. That's an important flash coming through. And this is around 45% higher than the current tariff. That's why you've seen that big spike come through in the GAIL stock. It's up over 2% right now. Once again, to just repeat that here, the tariff on integrated natural gas pipeline of GAIL from the 1st of April will be raised, and it will be 58.61 per MMBTU, and that is around a 45% hike that we do have from current levels. So that's what's really, got the stock very excited in trade. It's seen that sharp spike coming through, and it's 2% higher. But with that, let's move on and try to get you one final query. V. Satish writes to us from Chennai with an investment query. He is asking whether it is a good time to buy CESC at the current market price. He's a medium-term investor, and he wants to know if this is a good one to pick. Parthiv, coming to you on CESC, he's looking at a medium-term kind of horizon. It's down around 11% this month. Do you think it's a good idea to buy the dip?
I think the valuations of the company are very compelling, quoting at around 7 price to earning multiple and a very attractive dividend yield of 6%. The company has very good power generation assets, 2,500 megawatts power generation assets, and it also has a power distribution across almost 567 square kilometers in regions of Kolkata, where they have exclusivity till 2038, serves almost 33 lakh customers. So it's a very good business model, and going ahead, we do expect the electricity demand to go up, and the profitability level should also go up. And there is definitely always the support of the dividend yield in this counter. And we do believe that there is some upside of around 20-25% over the next 1 or 2 years. That is where probably you can look to exit as well.
All right, that is on CESC, and we are going to wind down on that note. So Parthiv, Rajat, as always, thank you very much for taking out the time and taking us through all of these queries that we had on individual stocks. We are going to wind down on the show, but remember, you can always email us your queries, and we're going to keep taking them up with our experts. Stay tuned. Closing bell comes up next for the final hour of trade before that major cue that we are tracking tonight.
Renu,